Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, May 21st, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Now, we will come back to this chart, but I want to start with a weekly chart of the S&P 500. So each candlestick on this chart does represent 1 week of trading. This way we can get the big picture of where the market is at and what happened for the week, and then we will move on to the 30-minute chart that we just looked at briefly in the intro. So the S&P 500 was down 43 basis points for the week, and we closed at 4155.86. And right here, this is this week's candle. And by the way, this is a 1-year weekly chart of the S&P 500. So the chart does go back 1 year. And the green line is the 10-week moving average. The orange line is the 40-week moving average. And then we have a support level right here that we'll talk about briefly at 39.41, 37.08, and 35.08. So what we can see here for the week is that we did dip below the 10-week moving average. Of course, that's equivalent to the 50-day moving average. And we had some trading below that, but as you can see, we very nicely closed above that 10-week moving average on the S&P 500, again closing at 4155.86 for the week. You can see here that we haven't had a close beneath this 10-week moving average since clear back in February. So we've had some trading below, right, intra-week, including during the last 2 weeks where we've traded below that 10-week moving average, but we continue to close above it. And you can see we've kind of been going sideways really for a little over a month in the S&P 500. So it is frustrating. But the good news is we continue to close above that 10-week moving average, and the damage has been minimal. It's been frustrating, right? Whenever the market goes sideways like this, it's not a lot of fun. And it's a little scary when you get this trading intra-week below the 10-week or 50-day moving average. But the fact that we continue to close above the moving average, it's good news. So as long as we can continue to do that, maybe the market is just putting in some sideways trading action before trying to push a little bit higher here. Now, if at some point in the not too distant future we start to see weekly closes on the S&P 500 below the 10-week moving average, the next major level of support is going to be found around this 39.41 level. That's this blue line right here. You can see there was a few weeks of support and resistance right there. Below that is going to be the 40-week, very equivalent to the 200-day moving average. That's this orange line right here, currently setting just under 37.50. And then just below that is the next traditional technical support level, and that's 37.08. So there's quite a bit of support, between that, let's call it 3700 and 3750 level, just to kind of round those numbers. So, I would be kind of surprised if we break beneath that anytime soon. Wouldn't be surprised if over the next 4 or 5 months we pull back to that level, but keep in mind we've got a rising 200-day or 40-week moving average. So that level will, as long as the market doesn't really roll over hard, we're probably going to continue to see the 40-week moving average continue to move up, and maybe the market kind of stalls, goes sideways, pulls back, and those two lines could kind of meet each other, right? The trading and the 40-week moving average, they could intersect, maybe somewhere around 3850, 3900 at some point in the future. Okay, but below this level, if for whatever reason this, the 40-week and the 37.08 level doesn't hold, then 35.08 is going to be that next real big level of support. But let's keep our fingers crossed that we don't see that level again anytime soon in the S&P 500. The next chart that we're going to look at really just focuses on the month of May. So this chart starts on May 3rd. That was the first trading day of May. And it ends on May 21st. Of course, that's the end of the week here that we're looking at. And this is a 30-minute candlestick chart. So each candlestick on this chart does represent 30 minutes of trading. I have quite a few annotations here to share with you. Let's start off with the lows that we've seen during the month of May. And what we can see here is over the last 2 weeks, and interestingly enough, it's happened on Wednesday each week, but we've put in the lows of the week on Wednesdays, and the 30-minute candles, right? This one dipped below during the middle of that trading period, but we have not seen one 30-minute candle close beneath 40.60 for the entire month of May. Okay, so we've had some trading here back on May 12th, just below that, and then you can see we rallied back up, and then of course this last week again, we sold off Monday, Tuesday, Wednesday, put in the intra-week lows just above that 40.60 level, and then we rallied back. And on Friday, May 21st, we actually kind of opened pretty strong, but then closed weak and closed right at the lows of the session, and we're down 8 basis points for Friday, but we still nicely closed above the 41.48 line, and we'll talk briefly about that. And most of the trading for the entire month of May has really been between the 41.20 to 41.25 level. That's these two lines here, and about 41.80. Okay, so there's been a lot of trading in the middle of this range for the entire month of May, and that's exactly where we find ourselves again. So, it's not fun. Again, it's this sideways grind, but the good news is we're still, nicely closing above the 41.20 to 41.25 level, which has been a really important support level for quite a while now, really going back to the first part of April, but we're not going to talk about that this week. If you want to see that, go back to last week's chart and you can kind of review that data. But let's jump back over here in the upper left-hand corner of the chart and kind of walk through real quickly the entire month of May. Now, we opened up the month of May around this 4,200 level on the S&P 500, but you can see that we couldn't hold it. We dipped down, but still stayed above that 41.20 to 41.25 level, and then we crawled our way up, and then we hit the all-time highs on the S&P 500 right here, okay? And we were trading above this 42.20 level for about a day and a half, right, on Friday, May 7th, and then the early part, the first half to two-thirds of Monday the 10th, and then we started this sell-off, and that started this downtrend line that we'll touch on as well. But we sold off, and then by Wednesday, the end of day, Wednesday, May 12th, we had put in the lows just underneath this 40.60. But again, the nice thing, at least I think, from a technical perspective, is that 30-minute candle did not close beneath 40.60. And then, of course, on Thursday and Friday of a week ago, we were able to rally back, got right back up against this 41.80 level, which, again, has been a very important level right during the middle of the last couple of months. Again, go back and look at last week's video if you want to see more data on how this has played into the month of April. But again, in this chart, we're just focusing on May. And then you can see, we got right up to that. Again, could not get above that 41.80 level, got rejected there, and then rolled back over. And you can see, touch that trend line right there. And again, we know that on Wednesday the 19th, we put in the lows of the day right here, just above this 40.60 area. Again, very equivalent to what we had seen the previous week. So we kind of have at least a short-term double bottom there. We'll keep our fingers crossed that that holds going into next week. And then Wednesday, Thursday, and then the early part of Friday this week, we rallied, but we could not. We got back above this 41.80 level, but we couldn't hold it, right? Got rejected once again at that 41.80 level, and then sold back off, closing near the lows of the day. We were only down 8 basis points for Friday, so nothing catastrophic. Again, still closing above this 41.48 level. You can see there's some support right there, some trading right there, a little bit right here, and then right in here. So, on these 30-minute candles, and it depends on what time frame, right? Whether it's 15-minute, 30-minute, hourly, daily, whatever, the support levels do change a little bit depending on the time frame you're looking at. But on these 30-minute candles, you can see that, especially over the last week and a half, there's this 41.48 level has been very, very important, okay? So as long as we continue to close above this 41.48, 41.50 level next week, or even really above 41.20, 41.25 on a daily basis, we're probably going to be just fine, okay? Just kind of a normal sideways corrective trading action that will hopefully allow the market to move higher at some point in the not too distant future. However, what we can see here is if we roll over and start to close consistently below this 41.20 to 41.25 level, and then especially this 40.60 level, if we start to see closes, especially on a daily basis, below 40.60, we definitely know the market is weakening. But the level that I think is the most important right now really is this 41.20 to 41.25 level. And as long as we can stay above that, then again, there's probably not a tremendous amount to worry about, at least for now. One last thing here, I promised you we'd talk about this this trend line. This trend line really started back on, this downtrend line started on May 10th, on Monday, May 10th, where we rolled over and could not stay above that 42.20. And as you can see, I drew this downtrend line connecting the kind of tops of those candles, and that intersected to May 18th. Well, on Thursday and Friday of this week, we were able to get back above and stay above this downtrend that had been in place since Monday, May 10th. So to me, that is a win, okay? So these are things to keep in mind, right? These are wins. We were able to get back above over the last couple of days and stay above this downtrend line. That's good. We've had a kind of a short-term double bottom around this 40.60 area. We were able to get back above that. That's good. We were able to close, easily above the 41.20 to 41.25 level, right? And, of course, above this 41.48 level on the short-term chart. So those are all wins. Now, we did get rejected again this week and, of course, last week at the 41.80 level. So I don't like that. But what that also tells us is if over the next week or so we can start to close above this 41.80 level, especially on a daily basis, that'll be a win, because we really haven't done that since back here really on the 11th of May. So we closed above it, of course, on the 10th, but that was after rolling over. So getting back above and closing above the 41.80 level, that would be a very nice short-term win. But again, as long as we can consistently close especially on a daily basis, above this 41.20 to 41.25 level, and hopefully really above 41.48 to 41.50, those would be things to really keep your eye on. So we'll keep our fingers crossed and see what happens over the next few weeks. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want more charts? Want access to proprietary market information? Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com, and I will also leave a link to this site in the description box below this video.